Hi, good evening. Today is Saturday, September 18th. Unfortunately, Andy couldn't join us today because he had a family emergency, but hopefully he'll be back next Friday. S&P 500 futures were down Friday almost 50 points or around 1%, continuing the pullback from last week as we have anticipated. We finally got our roughly 3% pullback and stopped and closed at the number we talked about last week as 44.15 being an important number to watch. And the futures closed about that level. This is a slightly different futures chart, so the numbers are a little different here. We traded in a narrow range around 50 points for most of the week between 44.80 and 44.30 level. Like I said, it's a slightly different chart here. And so at the end of the day, Friday, the buyers gave up as the dip didn't materialize, the rally never happened. And so they sold off, and now we're down a few more points after hours as well. The infamous sogi level, 44.50, was traded and touched and broken many times during this week. So it was quite an interesting level with a few trades around it. It's a third time during this year when we had 2 down weeks in a row for S&P 500 futures. We haven't had 3 weeks down in a row since the end of last year. Will we have another down week next week? I don't know. It's not likely. The bulls would want a sharp reversal on Monday. A gap down that reverses during regular trading hours would be very bullish. 43.75, 43.80 level is that what I'm watching. And if it doesn't hold, I don't know, but it may escalate. But if it holds, it would be very bullish. And as Victor said, breaking the 4,400 round number and then reversing is very bullish. We also set a 22 days low, so that also is very bullish. I would be watching on the reversal to close above 44.40 level, and that would indicate the continuation of the bullishness. Nasdaq this week was down around 1.5% or 220 points, and also closed on the low. All things considering, Nasdaq held up pretty well. It was trading in also a narrow range and only sold off at the end of the day, Friday. And Nasdaq as well needs a reversal early next week, so it doesn't reach the escape velocity. Apple and Microsoft were down around 1.75%, and Facebook was down 2.25%. We talked about Apple and the revenue issues from the services connected to gaming in previous episodes. So far, it has been the top for Apple. It also didn't help Apple that the latest iPhone release was a total dud. The creativity has been long gone in Apple, and the only thing they could come up with is different colors for the iPhone, which of course most people cannot see because they're wearing a case. So, and of course the camera was much better. Every release, they have a much better camera. And so now they're just basically rearranging the lenses from vertical to diagonal, and then they called it a day. I'm not even sure why they had this new release, because there is absolutely nothing exciting or different in it. Where is the foldable phone? Where is the improvements in actual software? Where is the fingerprint? Because now they only have the facial recognition, which obviously many people complain doesn't work too well in a world where everybody wears masks. But right now, Apple seems to be at a pretty solid support level. It also will help, obviously, Nasdaq if it reverses next week. Another interesting observation was that Russell was unchanged Friday, and Tesla had an up day as well. Tesla is also at a very interesting level. If it breaks out, it is likely to go to new all-time highs as well. But if it doesn't, it may continue trading in this range. It has been trading for the last few months. So the fact that Russell didn't really close down on Friday and Tesla as well was up just highlights the fact that the people are really not scared, and there is a lack of fear still in the markets. And until that changes, I think it's good to buy. And on Twitter, I hear multiple siren calls of melt up. people are quite confident that a melt-up is coming. I don't know if that's true, but vast majority of people expect this dip to be bought to all new time highs, to melt up into the end of the year in January, and maybe then have a sell-off early next year. But for me, that's just too far out to think about. We have Fed next week, Wednesday. So that's obviously should add some fireworks to the markets. This week, we had quite some interesting economic data released. CPI was 0.3 versus expected 0.4, and core CPI was 0.1 versus expected 0.3. And August retail sales jumped 0.7 month over month, while everybody expected the same number to be down. So instead of drop, we had good retail sales numbers. Although the July data was revised down by this exact number from 1.1 to negative 1.8. So looking at this data, it seems that it's enough for Fed to taper, but not enough for people to think that Fed is going to be aggressive. So that's why the market is probably going to look at the Fed's numbers and decide what to do. And if Fed is not aggressive, the rally shall continue. Another interesting survey data came out last week. The decline in assessments of buying conditions for homes, vehicles, and household durables left all three near all-time lows. Household durables fell to the lowest level since 1980. That's when the inflation was rampant and Volcker hiked rates to 20%. Vehicles fell to the lowest level since 1974 and homes to the lowest level since 1982. So those record drops were all due to complaints about high prices. Homes had the highest negative ratings of home prices ever recorded, as you could see on the chart. Vehicles, the most negative prices since 1974, and durables, the worst price rating since 1980. So all this talk of transitory inflation has been turning permanent for a while now, as we've been discussing, and every new indicator comes in, making it even more permanent. So Fed is very likely to taper at the next meeting. And again, we will be watching how aggressive the language will be. Given that the Democrats want to still pass their package of infrastructure, I don't think Fed is going to be that aggressive because at the end of the day, they want to keep their jobs and minimize the publicity from their insider trading that they have been doing and stopped last week. But looking at all of this inflation data, it's definitely going to affect the S&P 500 margin forecast. First, we have a widening gap between producer and consumer price inflation. So CPI is rising, but PPI is rising double the speed. And so now we have the largest negative spread between the two indicators since 1974. That should definitely put pressure on the margins. And with buying intentions already this low, how much pricing power the companies really have. So the margin squeeze will continue, and this will affect the S&P 500 estimates for earnings for next year. We now have 8 months of Biden administration. And what was accomplished? Payback for votes and inflation? Other than that, not really much. And so I would attribute some of the reason for sell-off last week to multiple mistakes that Biden administration keeps making, and the perception of the complete incompetence of it and the decline of the USA on the global influence arena. For example, one of the things that happened last week, France has recalled ambassador from US and Australia over the nuclear submarine deal. You know how everybody was excited with Biden replacing Trump and how it's going to be all great with our allies. Well, now France is really pissed at us. So much for this new and improved US administration. And of course, the biggest tragedy of all was that US drone strike in Kabul killed as many as 10 civilians, including up to 7 children. So instead of retaliation for the Kabul terrorist attack, Biden administration managed to kill more civilians on our way out. It certainly does not look good and inspire confidence. And the best part of it all is that no disciplinary action is expected for anybody. Meanwhile, our generals, instead of focusing on the job, are proven to be thwarting Trump and calling Chinese. It's basically an indication of treason to trying to warn them about the potential actions of US. It doesn't get more treasonous than that. In the tax world, it's interesting that AOC, after appearing in the dress Tax the Rich at one of the gala events, and all of a sudden she's amenable to bringing back the SALT deductions for the rich. So if they do that, it will cancel most of the Democrat tax hike on 1%. So what have the Democrats delivered that they have promised again? Nothing. Instead, what they have done is ruined children's lives. CDC warns that there is an alarming increase of childhood obesity during the pandemic. But what do you expect? You close schools, you close playgrounds, sports, and keep the kids at home. Of course, it's not healthy, but it's all done in the name of science and for the health reasons, I'm sure. Children stay at home, don't learn, don't play, and just get fatter. Science prevails. And just the recent news that a child was kicked off the plane because the mother refused to put a mask on her asthmatic son. It's an insane amount of damage that has done to the children in this country, and all in the name of saving people in the ages who already have multiple diseases and issues. We're sacrificing our new generation of kids, and doesn't seem to be an end to this. And science gets confused often these days. The latest one was that Biden administration has promised us all a third shot, a booster shot, but FDA has disagreed and in a very large margin declined to allow third booster shots. And the reason for this is because they have mentioned that vaccines have increased myocarditis in men under 40. So it seems that more and more side effects are finally coming to light that we talked about for a while. But they have passed the third booster shot for 65 plus, which is also interesting because I already know many 65 plus people who have gotten the third shot way before, weeks and weeks ago, before FDA approval. So, and just in general, if 2 shots are great, third is even better. Why not get 4? Maybe we should just get one every 3-4 months, because we all know now that it doesn't last. Well, let's talk about crypto. Andy is not here today, so I'm going to try to do my best. I have really exciting price targets for crypto today. Kathy Wood from ARK predicted that Bitcoin would surge to 500,000 in 5 years. So it's a nice prediction given that it's 50,000 now, or roughly under. So, but I'm not going to stop there. I'm going to go with Michael Saylor price target from MSTR, who said that the price target for Bitcoin is $1 million. I don't know how anybody could put a price target on something like Bitcoin that has no dividends, no cash flow, no earnings. So of course I know what Andy's going to say. Well, it has to do with network and usage, but the usage of Bitcoin hasn't grown as much as the price in the last 10 years. But we'll pick up this conversation next week, hopefully when Andy returns. But in all seriousness, the chart of Bitcoin looks bullish to me, and we are probably likely to go and retest that 52,000 level or so next week. But like I said, I'm no Andy, so don't listen to me. Let's wait for him next week. Another interesting observation about Bitcoin, or kind of related to Bitcoin, is that in Europe, the market electricity prices were skyrocketing this week and got a lot of news attention. So it will be interesting if that again percolates into bashing Bitcoin for using so much electricity. And I read an interesting take on that from somebody on Twitter. Somebody said that Bitcoin is basically a way to turn electricity into money. You plug in some computers, they burn a lot of electricity, they mine Bitcoin, and this Bitcoin you can convert to USD and you have money. So it's a complicated algorithm, but basically electricity in, Bitcoin out. And so if you look at it at a high level, the business of Bitcoin mining is basically finding the cheapest possible electricity. So unlike actually Bitcoin maximalists are saying that Bitcoin is improving our future, well, if you look at it the other way, Bitcoin is actually taking the cheapest electricity and converting it into money, while consumers are benefiting from more expensive electricity all around. And also we talked about Solana being going parabolic in the last couple of weeks. It actually crashed this week, but then they have rebooted and now it's back to functional. It's just an indicator, again, that the technology is still in the very beginning stages of development. And for people not to overstay their welcome, especially in the less famous coins outside of Bitcoin and Ethereum. All right, that's it for me for today. Everybody have a great weekend and we'll see you next Friday.